Good evening, folks. Welcome to the live stream. All right, all seems to be working. We're a little early, folks. Welcome to the live stream. I hope everyone can see me. It seems to be working okay. And good day, Manatee. I'm using some new headphones and a new microphone, which is contained within these headphones. So I'm trying it out as a new audio device, which seems to be working pretty well. So welcome to you, Manatee, and if you can hear me okay, and Nemdi, welcome to you too. If you can all hear me pretty well, just let me know, because I have no view of the actual sound that's coming from here, and I can't hear myself on the monitor either. So, good day, Joshua. Be interesting to see if the dollar continues its uptrend this week or is a slight pullback. Love your content. Thank you, Joshua. Appreciate it, mate. Thank you for being here. I appreciate your attendance. Yeah, so we'll talk about the dollar. It's not going to be a long session, folks, so we'll spend about half an hour tonight. Markets opening in about 5 hours' time. Hello, Amit. Nice to see you. Wonderful. So, for those of you who are in here, if you're interested, before we start, these headphones are the Sony something something XM6, and they're noise cancelling headphones with 12 microphones built into the bottom of the microphones, directionally angled to where they sort of estimate my voice will end up perfectly, and collect the sound and cancel out all the other sound. And I don't need that horrible microphone in front of my face, which you'll remember from previous streams is rather annoying. And I can also move around the room. This is the way it looked before, which is absolutely annoying. And this is after. So there you go, technology. Hi, Martin. We can hear you, or you came to hear me, or both. Hi, Marjorie. Can we long gold? That's your eternal question. We'll have a look at gold shortly. We're not doing any trades right now because the market's closed, except for on Bitcoin, XRP, Ethereum, and some of the other alts. So welcome to the stream, everyone. I've also picked up a bit of flu over the weekend, so I might sound a little cranky and a little harsh. And also the camera, my main camera, which is my iPhone, has ceased to work. So I'm using the action cam, which gives you a little bit more of a broad escape of view of my office and the background, but it might lag a little bit. So please don't be put off by that. Thank you, TC. Appreciate that, mate. I tell you what, it's so liberating, TC, to have these headphones and no microphone right here in my face. And also to know that the echo in my room, because it's got wooden floors and it's a bit old-fashioned, the way I like it, those echoes don't get picked up much. And I can also move away and tilt my head towards that screen or over here, and the microphone picks up the sound equally as well. So thank you very much, TC, for confirming my suspicions on the new microphone. Right, folks, we've got a few minutes to go before we start off. And just looking at the crypto coins, Ethereum is right up into resistance now. We've taken profit at this level, and I'm waiting for a pullback now. I hope we get it. We've met the technical target, so I'm watching those very closely tonight before the markets open. I'm very active on these right now, and I've been scalping these during the weekend. I'm looking for a little bit more upside on Bitcoin and XRP. Ethereum, I think we'll have to wait for a pullback. But we'll talk about all that shortly. And Amon, welcome to you too. You want to talk about WTI? We'll talk about that shortly as well. So welcome to everyone. And if you're new here, please like and subscribe. There's a button below this video that says subscribe, and there's also a like button. And I'm going to use the colloquial smash the like, if you will. It helps support the channel and helps me to make more of these videos. So folks, it's Sunday afternoon or Sunday night, Sunday morning, depending on where you are in the world, and we're ready for a bumper week ahead. Joshua, thanks for your comments. Sound quality is good. Might have to get me a pair as well. Thanks for sharing. Yeah, fantastic. Absolutely amazing. And they have a battery life of about 40 hours. So, if you're willing to sit around for 40 hours, we can see how long the batteries will last. POTUS News. Beast mode focus. You want to talk about SUI. Yeah, just remind me of that a little bit later on if I forget. Well, I don't. It's not something that I trade, but I know it's um, an interesting one. We'll have a look at it. Hi, Amon. Hi, James. You're always helpful. You're great. Thank you, Amon. Appreciate that. So, folks, I'm a little tired. We've had quite a busy weekend, been active on the beach and playing with the dogs, walking the dogs. We went out for pizza, actually, at a really good Italian restaurant today. Um, I think the only real Italian restaurant in my town, and they're actually from Italy, and the food was excellent. And we had what they call Neapolitan pizza. It's not the Napolitana style, it's Neapolitan. It's got anchovies, mozzarella, stuff like that. Quite nice if you like anchovies, which I don't much, but I don't mind them. Right, folks, we've got a minute to go, and I'm going to, I think, start with the cryptocurrencies and just wait for the last minute or two before everyone gets into the room. If you have any questions, please post them up now. This is not going to be a long session, so if you'd like to get your question in and answered, it's a good idea to get your question up first before the rest. Excuse me. One more sip of Red Bull, and I've got the new vanilla flavor here and vanilla ice, and we'll go straight into the charts. The time has ticked over. Let's get going. Type your questions up as I continue, and we'll get to them at the end. Now, I'm on the crypto page here, and we've got Ethereum. We'll look at the metals underneath at the bottom, but I'm going to talk about the top row first. That's Ethereum, Bitcoin, and XRP. Now, all I've got to say is that we have been long on all of these until now, and I've exited my Ethereum long position right there, a little bit earlier, actually, a couple of days ago, up into that little spike high. I think we got out at 36.50. We're trading at 37.90. So we missed out on that last little bit, but that's okay because we got up into that order block up here where the red line is. And that might just be a little leg too far for the current time being. Remember that we have this very clear technical pattern. We've got the bull run up, the bull flag with a clear out, the spike down there, down below, clearing out the weak hands, the paper hands, and mostly retail traders. And what's interesting, folks, this big rally that we've seen in crypto has been mainly driven by, apparently, by large institutions, hedge funds and investors and Bitcoin treasuries and that sort of thing. Whereas if we go across to the stock markets, and this is a very interesting point that you may not know, these big rallies in the NASDAQ, the S&P, and many of the stock names, all of this stuff here, has been driven by retail traders and not mainly by the corporate traders, investors, hedge funds, banks, that sort of thing. And I believe about 69 to 70% of this rally has been fueled by retail traders, which means the corporates have been left behind, and either they have to catch up or we're going to have to go down to join them below. Are they going to start selling, in other words? Some of them, and many of them are already short. A lot of them are in cash. So let's say the investment market, the whales, the big markets are short or in cash. They have to now decide whether they need to remain in cash or go long, or remain in cash or go short, or hedge their shorts, or take an option play to the upside and put some calls in perhaps. So all sorts of questions here at these very high levels, considering that institutional traders have largely been left behind on this rally. And for once, maybe not the first time, but that's pretty rare, the retail traders got it right and the institutions got it wrong. Whereas on crypto, let's go back there, it seems to be the other way around. Retail traders seem to have been left behind by and large, and this has been driven by, I think, mainly companies like Strategy, MSTR, and the Bitcoin treasury and crypto treasury type companies. All of that having been said, we've now reached the technical target of this move up because we've had that run up, bull flag with a clearing out all the weak hands. And you'll see this on the Bitcoin chart and the crypto charts, basically. This is Ethereum. because the retail traders are getting cleaned out by the big investors, whereas on the stock markets, we're not seeing those clear outs because it's mainly driven by retail. So retail clear out and then the move up, and that line there is equal to the previous line, the run up into the bull flag in gradient and in distance. So that's an exact copy of that previous line, and it takes us up to this red line here at around about 3,780, which is where we're trading now, just slightly above. So that's the right place to exit Ethereum, but I'm still long in my mind, in my strategy, in my approach, and I'd like to buy dips back down to this trend line. It's not a trend line, it's a gradient line, and so we could actually get below the line, and often with a gradient line, the price will trade above and below it on the way up. So anywhere back down towards this line, I'd like to buy some more Ethereum for the next leg up, and I think we'll get through this double top. Some are calling for a triple top here. Perhaps that might be the case. Actually, already a triple top, a quadruple top, maybe. Seeing as it's already a triple top, if it is going to be a quadruple top, it will be pretty rare. Mostly they don't happen. Mostly it's either single, double, or triple, and we've already had three. So I think we'll push up, but we may need to correct first. We might even need to get all the way up to the top first before the correction, and it certainly looks like we're trying to do that already. We've got way ahead of the gradient, and we've gone past the technical target of this move up. So it's the opportune time to exit. I'll be certainly looking to rebuy dips, and we will get those dips at some point. Not necessarily a dip. In fact, we may just get a pullback in time. We've been talking about this quite a lot. A new word that I've learned, PIT, pullback in time. I prefer to call it PITA, and you can imagine what that means. I won't repeat that, even though it's not that rude. So a pullback in time means that after, for example, in Ethereum, we had that big run up, and then we did not pull back apart from that one clear out dip. We just went sideways. So it is possible that we'll do exactly the same thing here. Sideways for how long was that? Let's have a look. 12th of May until the 11th of June. So about a month, I suppose. Is that a month? May? Yeah. Oh, that's July, sorry. So 2 months. So that's a 2-month pullback in time or sideways movement. And we could see the same sort of thing here now. So we're currently 20th of July. 2 months takes us 20th of August, 20th of September. And we could draw that in. In fact, what I'd prefer to do is draw a fractal of this existing move, and it'll give us exactly what we're looking for. So I'm going to just quickly go to, not that one. I'm going to go to the bars pattern, started at the bottom here, bring it all the way up to where we sort of took off, and just copy that, and whoops, and start that again at the bottom of this bull flag. Right, like that. And you can see exactly what I'm talking about. There's the move up, equivalent and equal to that gradient and that distance right up to the top there. And then that 2-month pullback in time, sideways movement, which takes us towards the end of September before the next move up. So that's kind of half of what I'm expecting, but it really depends on Bitcoin and whether we're going to see an altcoin season. This might just carry on moving higher very fast, very dramatically, or we may have to have this, or we may have to pull back all the way back down to some of these lower levels. I don't really know. I think this green path that I've highlighted here for you is probably the most likely path that we'll achieve. So it's an opportunity to take profit right now, not eliminating the possibility that we might just surge up through here and carry on moving up quite dramatically up to 4,500. Actually, my target's about 4.8 or 5.2, and that's a long way up here. I do prefer the idea of a slight pullback or a pullback in time before that happens though. So really that's Ethereum, and you'll see the same sort of thing on XRP and the same sort of thing on Bitcoin. There's a couple of problems with Bitcoin I'll talk about shortly, and then we'll move on from crypto. Ethereum's got the same sort of thing, but once again, drawing the same sort of patterns as we did, XRP, not Ethereum. XRP is similar in that we've got, let's just squeeze this down. We've got a bull rally, a very, very long bull flag with a smaller bull flag contained within that. And then we had that little clear out. It's difficult to see. If I reset the scale, you'll see it. There's that clear out like we had on Ethereum, and this is XRP. There's the clear out, getting rid of the retail traders. Remember, this is mainly fueled, this rally, by corporate and treasury type companies. So every now and then they clear out the retailers like that. And we've got a long way to go up. Now, if we follow the same thinking as Ethereum, and you just use the bull flag and the bull um, flag extension. Let me just quickly get this nice and neat for you. Then we should see a move up to one of these levels. I've drawn them from two different points, the very lowest point and then also the bottom of this flag at the point from where we took off in this last rally. So it could be one of these two, but about $4.20 to $4.50 for XRP, and we're at 350 now. So maybe another dollar in this one, or 50 cents at least, up to about there. And I'm holding my long sort of bias on this one. But once again, like Ethereum, we've got to rebuy, and I've taken profit at this level. We actually took profit at that high there, and we've moved fractionally higher. So I'm waiting for a pullback back down to the gradient line, and you can see how all the moving averages are languishing well below us, waiting for the catch-up. So we'll probably have to pull back a little bit there too, and we'll wait to see what sort of levels. I've got orders stacked up on both of these, XRP and Ethereum, to take advantage of those pullbacks. Roughly on Ethereum, every $50 apart from about let's give you an idea, from about 3,450 all the way back down to this breakout at about 2,900. So these are stacked, just small positions adding up if we do get those pullbacks quite quickly. Same on XRP. I've got a variety of different buy levels down here. I'll share those with my private group if you're interested in those. We can talk about those tomorrow morning in my private group, and I'll tell you what those levels are and what those numbers are. Now, Bitcoin, we've got a bull flag forming here at the top of this move, but and we just got up to that 61.8% Fibonacci extension, and we've just sort of moved sideways since then, about a week and a half, maybe 2 weeks now, and we're forming this triangle. We tried to get through the bottom. Really looks like a classic triangle, although it is heavy towards the bottom. As you can see, we're not getting up into the top reaches of the triangle, but we're heavy on the bottom line of that triangle. I think we may have to suffer a pullback on Bitcoin down to the 20 or even the 50 period moving averages, or at least this breakout point and this orange line, which I've had drawn in here for a long time. That's the 38% Fibonacci retracement. It's at 112,580, and it's the breakout level on this recent, very small and insipid bull run so far. We haven't even started this run up yet. We've just poked up through there and consolidated. This is the beginning, I hope, of a big bull run, and this is the first phase. We haven't retested that breakout level just yet. I want to show you something really important on Bitcoin, which many people don't necessarily know about or look at, and you have to go to the CME futures price on Bitcoin. Now, there's one major problem here. Now, you'll notice that this is not trading because it doesn't trade over the weekends, and because of that, we get these weekend gaps. This was the weekend of the 11th of July, and we gapped up. Sorry, that's Friday. Where are we? That's Thursday. Actually, it gapped up on a Friday. So there is a gap here. Actually, it was during the week, not a weekend. And we gapped up during the week. It was a public holiday, perhaps. I can't remember now. It's my mind's a little foggy, but it doesn't really matter. If it wasn't the weekend, which appears not to have been, then it's even worse, and that gap may need to be refilled. Often these CME gaps on Bitcoin that occur over the weekends are refilled or filled later at a later point, but not always. But I think if there is a gap during the week, and particularly if you look to the left-hand side of this chart, there is no price action at all, ever, in this zone. So that's a clean, pure gap. And on the CME chart, you can see maybe it looks like a bull flag, but that gap is perilous below us right there. I wonder if you can see that on the 4-hour chart. Let's have a look. Yeah, there it is on the 4-hour chart right there. So that's what needs to be paid attention to, and that's at 115,660 down to 114,400. So 116,600 to 114,400 is a very large CME gap that occurred during the week, and there is no prior or former price action in that zone at all, ever. So it's a bit perilous. Doesn't mean it needs to be refilled, but I would say chances are more likely than not. Now, let me go back to my own chart on Bitcoin, if I can find it. And maybe, oh, there it is, Black Bull. This is the broker that I trade with. And let's go back to the day chart. So there we are. You can't see the CME gap here because the price trades through there on normal brokers. This is not the futures, but on the futures, we had that big gap up. Right, now, I've got two purple lines on this page, and one is leading up from this big bull run from the bottom to the top. Then we've got this perfect technical bull flag, and then the breakout and the target, very much like we did on Ethereum, and you can see that on Ethereum it worked out perfectly. Let me just remind you of that. There's Ethereum, right? Bull run, bull flag, and that exit of the bull flag equivalent and equal, identical to the bull run. Let's go back to Bitcoin, and you can see we have a similar sort of pattern. There's the bull run, bull flag. This one's angling down, whereas the one on Ethereum went across the page, and we just dipped down to the bottom there on that clear out, and then took off. Now, if I do exactly the same thing, use that purple line, bull flag, stick it to the bottom of the bull flag, and project it up towards the top, it gives me a target for Bitcoin on this current run. And don't worry about the fact that we've fallen down through that purple line already. Remember, it's a gradient line, it's not a trend line. So we've got the gradient line, which is setting the target and the angle of attack, or the flow, or the gradient of this move. And that means that we should get up to 135,000 by the 7th of August, roughly. It's actually not that roughly, it's pretty precise, pretty accurate, really, I suppose, if you're using this sort of technical pattern. Now, there are all sorts of other methods that one could use. Notice also that this level here, where this bull flag projection ends, is also the 100% Fibonacci extension, which means that move there is equal to that move there. There are further Fibonacci extensions above that level, and we go much, much higher and faster as we get up to these fib levels. And we start at about 160, and then 200, and then about 240, and then about 260. Miles and miles and miles above where we are. As you can see, we've just started this move with that move out through the breakout point, the orange line, previous all-time high, and then this local recent all-time high. And we've only just started going. And we've got all these fib levels above us. The first one being at 135 in just a couple of weeks' time. So that's crypto, folks, and that's I think that's a pretty decent summary. We spent 15 minutes on that. Let me have a look at the chat, see if there's anything that's come up. Make sure you can all hear me. Sound quality is good. Everything helpful. You're great. TDC, hello, everyone. Just going through what I think about WTI. Everyone feeling great. Okay, let's carry on. And also, you know, this new sound system with these mics built into this headphone, which is this perfect unit. I get all the sound, 12 mics, and I can be at complete peace of mind that everyone can hear me and I can hear everything around me. Absolutely love it. They are Sony something something M something 6 headphones if you're interested. Unfortunately, they're pretty expensive, but I think these are my new favorite bit of tech. Let's have a look at gold. There was a question about gold, and we'll talk about gold and silver together. And we're still short on gold. We're short at the current price, so we've literally not gone anywhere. We've only been short for a few days because we were short for a couple of weeks. We took some profit on these shorts variously. We got long at one point, maybe a week ago, a week and a half, down here somewhere, maybe over there, and we've now got short again. So out of all of that, we may have made on this chart a couple of $100 at the most, with relatively small position sizes. When I say a couple of $100, I mean in terms of the price movement on the chart, not the balance of my trading account, but the movement on this chart. So a couple of $100 of profit on the shorts. And then we went long, and we got out of that at break even as it came back in again, and now we're short. There are three potential paths here. I don't know which one's going to occur, but I'm happy with either, any of them really, except for the first one. That's this orange one. If we take off from here, it's going to be a worse opportunity for me. I'm going to have to hedge it fairly soon. I don't know whether it's going to be at the top of this range here at about 3,380, or if I'll hedge it, higher up. We don't have a huge position on it. Maybe I'll hedge it higher up after having added on maybe some more shorts over here. My general idea is that gold after this, and I've traded gold for many, many years, so I kind of got a feel for how it moves. And generally we get these long moves up, which last about a month or between, let's say 2 months on average, but then we get an equally long period of consolidation, which may also last about 2 months. So we get fairly equidistant sort of sections of rallies and then ranges, rallies and then ranges, and occasionally a bit of a dip. Not very often, but sometimes gold price even goes down. But as you can see from this long-term chart, not very much and not very often. So we shouldn't be too short on gold too often. We should try and be long, but we are short today, and simply because of the way that gold moves. And there are also various economic factors and um, um, headwinds in the market, sort of the risk on aspect of the market. In other words, people are maybe looking for higher yields in things like Nvidia and Bitcoin, XRP, and MSTR. And often what people will do, and I've done the same myself quite often, is even if I'm bullish on gold, but it's moving slowly, there's no yield on gold, there are overnight carry costs, I'd rather put some of it in gold and some of it in a fast mover like XRP or MSTR or even silver, and rather hold those rather than gold. So gold is not always the best flavor of the month, and very often after a big move up, some of the other markets will start to pick up and gold will start to slump off a bit as people move into more risky assets and away from the risk protection of gold and also the Swiss franc. So that's where we are. I'm going to just turn my heater on, folks. It's very, very cold here in South Africa. And I think there's a good chance of a pullback. Now, if we do get a pullback, how deep that would be, I don't know. It might just be as shallow as 32.40. We've done that quite recently. It might be as low as 31.80, 31.20, sorry. That's my favorite spot. But it could be even lower, and I'll just drag this red line down to show you. In this zone here, there's a swing high and low, and it's the 200-period moving average, and there's the big 3,000 round number down there, and that would make more of an interesting or decent pullback and allow more people to get long on the gold market. Right now, everyone's kind of locked out, and unless you sort of already long, it's pretty difficult to get long at this price, although it may carry on up, but it is difficult to get long at these very high levels. So we're short, looking for either one of these two paths, and potentially even a path down to 3,000. And there's even a chance we could get much lower than that, down to about 2,700 into these order blocks. Now, people don't think that's possible, but I'll tell you that it is possible because I've been trading this instrument for most of my life, really, I suppose, if you look at it like that. And gold does things that you don't expect sometimes. And although it looks like this is a very neat and obvious picture, either down to there or straight up from here, or most likely down to 31.20, we could get that much deeper dip. 3,000 is very appealing, and so is just below there at about 2,800 or 700. Right, having said all that, because we're short on gold, I have to protect myself because it's in a bull market and we may not get that pullback. I may have to hedge gold. Because of that, I've gone to my favorite other metal, and probably more favorite than gold at the moment, and that's silver. And we are also, at the same time as being short on gold, we're long on silver. And we've done this now. This is the sixth time we've done it. Every time we've traded long silver and short gold simultaneously together, we've been able to profit on both of them. And that's because silver has been outperforming gold, and the gold-silver ratio has swung in the favor of silver, and gold has been lagging silver a bit. So we're long on silver, short on gold, like we have been really since the beginning of, I think, May, or even maybe earlier than that, maybe even April. So these positions we've now taken profit on, these two green arrows upwards. First of all, I wish I had one down here as well, but that was long ago. At 31.70, we got another one at 36 something, and we got our last tranche at 37.42. We're trading at 38.14. So how far could we go in silver? I think we could go well above $40, and I think we could get into the 50s. And if that moves up, gold will probably move up simultaneously. But in the short term, whilst we're finding our feet and thrashing around here, it may just be that gold dips off a little bit, maybe $100, maybe $200, maybe down to 31.20. And at the same time, silver holds its ground and even sort of edges higher. And that's what it's been doing over the last few months, and that's what we've been trading. So, yeah, we're trading these two charts individually as they have presented themselves to us. But I'm also aware that these are very highly correlated instruments. But I'm also aware that I want to hedge gold. I want to be a little bit cautious on the gold shorts, and there's a great opportunity to hedge that with an instrument that I want to be long on in any case, and that's silver, a very highly correlated instrument to gold. And at the same time, we're also long on copper, and this is one of my other favorite plays in metals. And I'd say silver and copper are my favorites, and not really gold, as for potential explosive growth. And here we are in copper. There's our long positions. We started buying at the bottom down here. Those ones have been taken off. And we've been buying since then. And we're currently trading at all-time highs on copper. And I think we could get even higher. So we're trading at about $5.50 now. And I think we could get up to as high as potentially, well, above $6 in this initial run. But I think we could get up to $10 and maybe even higher on copper. So pretty bullish on copper and silver, bullish on gold, but not as excited about that right now, not at the moment. And even if we do move up much higher in gold, much faster than I expect, we should have a much faster and longer pullback if that occurs. Now, going across to currencies, let me go through some of the questions. Let me restart. Let's pause, and I'll start at the top and go through some of the questions. Right. Marjorie, you've asked if we can long gold. As you know, you're in our private group, in our community, we are short on gold. If you want to long gold, Marjorie, go for it. But it's not something that I'm going to be doing. I'm long on silver instead, and I'm short on gold. All right. Now, Joshua Zane, your question is about dollar yen. Let's have a look at that. I don't have dollar yen on my charts, but I do have some of the other yen crosses. I want to talk about the dollar index first of all, though. So quickly, let's have a look. This is the euro yen, by the way. It's a beautiful, perfect, smart march, regimented, orderly, perfect march up this trend line. Way too neat. That's got to come crashing down. But let's have a look at the dollar index, DXY. And I'm going to go across to TVC. No, actually, I'm not. Yes, that'll do. That's fine. Yeah. So this is a dollar index, and my general idea and thought on the dollar index, and I'm still sticking to this, and I'm convinced of it still, until proven otherwise, is that we have a target of around about roughly, if we carry on in this gradient, down to about, and it probably slowed down a bit, down to about 93 or 94 by sort of in about a month's time. So in a month's time, I think we get from 98 down to 94, let's say. That's 400 pips down, which means that the pound, the euro, the Canadian Aussie dollar, Swiss franc, Japanese yen, all the currencies against the US dollar should see further growth. The reason I think this is because that's all, apart from being the 78.6% Fibonacci, we broke out through the top. We had a big move up. Then this flag, big breakout through the top of the flag, looked like it could have been, it's not a very neat flag because it's dipped down way too much, but we broke out through the top, fake breakout through the top, formed the top of this channel, which is now the top of this expanding megaphone pattern, which looks like a, well, it looks like a megaphone, as you can see. Don't need to explain that further. Look at the Bollinger Bands also spreading out, splaying out along with it in the form of that megaphone. This big Bollinger Band squeeze means that this big move is overcooked, and the Bollinger Bands have exploded outwards, which means that we're going to have to consolidate, and these Bollinger Bands will need to come back in again to the sort of thickness that they normally enjoy, like as you can see across to the left. So, but I think before anything dramatic else happens, we're probably going to have to visit the 78.6. The breakout through the top was a fake break. The real break was through the bottom, through Dixie Moab, mother of all breaks. And now that we're below Dixie Moab, I think we're going to stay below there for the foreseeable future, at least for the rest of this year. And I think we'll have to get down to that falling trend line, or the bottom line of the megaphone pattern, the 78.6% fib, and maybe just below there into my blob. I have to move my blob along a wee bit now, because, what is that? Because things have slowed down a bit, but let's put it over there. So blob over there, target over there, then a sharp bounce all the way back up to Dixie Moab. We can even draw that in and set a sort of a path. And I encourage you to do this because you can draw your own, sort of get an idea of where we might be at a time and place. So something like this, and this is just conjecture. And then I think we'll get all the way back up to Dixie Moab or more. And I'll just put a big question mark in that zone there, indicating that once we get all the way back here, we may consider reselling. So that's my strategy for the dollar, which means that we should see strength in the euro, the pound, the yen, Aussie dollar, Canadian dollar, Swiss franc, all the majors against the dollar until we get down to there. So you can watch this chart in order to time the trades if you're trading currencies, Forex, if you're trading, the dollar yen, which someone's asked about, we'll have a look at shortly, or if you're trading the euro against the dollar, or if you're trading the pound, cable, or the Swissy, whatever it might be, Aussie dollar. Keep an eye on that dollar index chart that I've just put up there for you to try and time your entry and your exit. So, in my opinion, you should be short, you should be long on the euro, long on the pound, long on the dollar Swiss franc, long on the Swissy, long on the Swissy, etc., etc. But there will be a bit of thrashing around. The dollar's not just going to give up its ghost without a fight. And so these are not going to be neat and orderly charts, I don't think, particularly at these perilously low levels for the dollar. So having said all that, we have a long on the pound, and I'm justifying my long with all of that bump. But here it is, down to the basically a very clear and obvious support level. We've got the 100-period moving average coming up underneath us. We've broken down through the trend line, but only down to this horizontal support. On the daily chart, we've got a one up, one down reversal candle pattern right here. In fact, two of them in a row, three of them. Excuse me. There's the big one up, green bullish candle with a big spike high. There's the one down, spike low, and then another spike high, one up, just into that trend line. Now, we're having a problem with the trend line because that trend line is holding us down. And so is the 50-period moving average here on the day chart on the pound. Excuse me. So essentially the okay, I'm still here. I've got to change video. All right, sorry about that. I've changed video camera because the other one's given up the ghost. I'm on the camera from the MacBook now. I hope you can see me all right. All right, I think it'll be all right. So yeah, so a variety of one up, one down reversal candles here at support on the pound. We are long. We've been long variously before. We got long at the bottom on the last occasion we reached here, and we got out at the top, and then we started getting long again on the dip back down to the 50. Ironically, the 50 is now the one that's holding us down, and we got long again at the support level. So small tranche there, slightly bigger tranche here, and we've got to get up through there. Reversal candles at support, but being held down by the trend line and the 50-period simple moving average. So let's see how we go when we open up. Maybe we'll gap up or something weird this weekend. I don't know. And that's all we have, I think. And we've also got long trades on, short trades on the pound yen and the euro yen. Let's put that one back. Euro yen. I'm just going to get my own broker's chart up. Yeah, so euro yen, we're quite out of the money on this one. Our shorts are in this sort of region. And what's happening here is that we're traveling up this trend line in sort of way too neat, way too orderly, regimented, as I said earlier. And we should probably, collapse down through here pretty quickly. Notice how the 20 and the 50-period averages are catching up with the trend line. And once those are all aligned, the 20 is catching up fast, we should then be able to plunge down. My target for this is actually 144. We're trading at 172.9 right now. So a long, long, long way down, and the same on the pound yen. We seem to have lost, what's going on? Anyway, I seem to have lost a signal there for a little bit, but I hope you can all see me okay. This is the pound yen, same sort of thing. Our last tranche was kind of at the level that we're at right now. Top 200-period Bollinger Band into that resistance zone, that big red block. I know a messy chart. I do apologize. It's simply because I've switched to dark mode, and I haven't made all the lines sort of neat and orderly just yet, and got rid of some of the ones that were hidden behind the light background. So yeah, so we're short on the euro yen and the pound yen, but the main play is really long the pound. We were long the dollar Swiss. That one stopped out at break-even. We're also long the Australian dollar against the American dollar from quite a long way below where we are, and that's moving up. If you remember, we talked about this quite a lot. This is meant to be a symmetrical inverse head and shoulders or squiggly upside down bracket. And I said we'd take off as soon as we got sort of, I don't know, about a week ago, we were symmetrical. The left-hand side was equal to the length in number of days, roughly to the right-hand side. And we've, maybe even 2 weeks ago now, probably a week and a half, and we've surpassed that by a few days. We're lagging behind now, but I think that might just take off. So general dollar weakness is what I expect, down to about 93, and maybe even the dollar index could get down to 90, which means we could actually see a 600 or more pip rally on some of these majors against the dollar. Right, having a look at NASDAQ and the S&P, and I won't go into individual names unless requested so, but here are our positions. Right. Well, let me just show you where we are in this chart. So this is the NASDAQ chart, the day chart. Look where we've got up to. We've got to the 50%, or yeah, 50% extension. It's not a Fibonacci level, but it's the 50% extension of the move up from the bottom up to this high over here. It's difficult to make that level perfectly precise. Let me just have a quick look. Yeah, very difficult because of the way, I mean, we haven't really had any pullbacks, so these extensions aren't that good. But we are near the top 200 Bollinger Band, and we are near the channel center line, this dotted line in the center here. We're very overextended. We've got sold conditions on the stochastic, on the RSI, 1473 stochastic, 14-period RSI. And we've also got stochastic and RSI divergence, indicating that we've run out of steam at these very high levels. We've been long on the NASDAQ since that green arrow at about 22,800, 700 something. And we've hedged it at the channel center line. So I have that long position still open, still on, and it's still in profit. But I sold an equal amount at that channel center line and that Fibonacci, or 50% extension level. In other words, I've paused, I've locked in profit. I don't know what's going to happen next. On the S&P, we've gone short. So I'm hedged on the NASDAQ with profit locked in on the bull side, on the long side, and I'm short on the S&P with no profit locked in. I have two short positions, one from there at the top of the channel and one from here, which was actually taken inside this red candle, but I've moved it across so that you can see it. You can't see the red arrow in the red candle. So we got short in that red candle, roughly at the top of the next day's candle. So we have two short positions, quite small, not full positions, and the last one was taken right at that fib and channel top. Well, it's not a channel, it's an over-under trend line, and you can see we've traded underneath this, above the trend line for so long. Then we traded below it after Liberation Day. We got up back underneath, right up to the underside, even though we've made a new all-time high, past that almost triple, but certainly double top previous all-time high, but we're still under the trend line. And therefore, that trend line remains valid, undefeated, and in play, and it's also a confluence with a 50% extension over here. Yeah, 50%. So much the same as the NASDAQ at the 50% extension. So we're short on the S&P, and we're long on the NASDAQ, but we're hedged. In other words, now neutral, but with profit locked in. The one that surprised me on Friday was MSTR, one that we're long on. We only have 10% left on this trade. We got long at the green arrow down here at 360 odd. By the time we got to the orange arrow here at 440, we're out of 90% of that trade. So beyond the orange arrow, we're only holding 10%. We held that for about a week, and then on Friday, it just collapsed. So it makes no difference to us. We're back down to that previous breakout level. It makes no difference because we've taken most of the profit on this trade already at much higher levels, but it's still a pretty good chance that we'll find support here and bounce off this level here and move up. So if we do that, I'll keep that 10% that we've got on remaining from this long position from 360, and I'll add some more of that position back on, remembering that we've taken 90% off already. So I can start adding some of that back on down here at the previous breakout level. It's also a Fibonacci level, and it's also where the 20-period moving average is coming up, and the 50 actually coming up underneath. That'll be an excellent support level for buyers of strategy, the new name for the company that was called MicroStrategy. They've gone big. They're not micro anymore. Now we're long in Tesla as well. We've got a good position on this one. And Tesla, despite all odds and despite all the headwinds caused by political shenanigans, Tesla's done it. It's now broken up above this cluster of moving averages. There's the 50, the 20, and the 200. the three most powerful moving averages all on top of each other. And Tesla on Friday managed, not very easily, and with a lot of work, a lot of effort, and some options explorations, helping it over the finish line, managed to get us up over that line. So there we go. Tesla's done it. Next stop up to the red line at about 350, and we're long from $288. We're currently trading at 323. So a good move for us on Tesla. And it was very unpopular when we bought Tesla, if you remember. And everyone was telling me I was a complete idiot. But the charts don't lie, folks. This is a perfect island, abandoned baby, cluster, isolated reversal candle cluster. A lot of words there. Basically, an island reversal. And off we go. You don't see these very often, maybe once or twice a year. And even if you're trading a lot of different types of industries and instruments and indexes and indices and names, you'll hardly ever see island or abandoned baby reversals. But we got one there. We're also long on ARC-K, and I'm a little worried about this one after that abandoned candle on Friday. And if we close with a gap down below that candle, or even open with a gap below that candle, we'll certainly get below the top of the previous day's candle, Thursday's candle. If we get below there and close below there and the top Bollinger Band, I'll have to exit this trade. We got long down here at 71.50. We're currently trading at 77.60. But if we close beneath 76.20, I'll exit or hedge that long position on ARC-K. So that's that plan. And then NVIDIA is the only one out of all of them in the names that we're short on. And once again, like Tesla with its beautiful island and abandoned baby reversal at the bottom, I'm thinking and hoping for a similar pattern on Tesla, on NVIDIA, but at the top. So there again, we have a cluster of candles isolated from the previous candles, forming at the top above the 200-period Bollinger Band. Let me switch you back to Tesla to give you an example of the same picture on the opposite side of the chart. There's the bottom, it's not the Bollinger Band in this case. Bollinger Band's miles down below here at the bottom, but it is a similar moving type average support. It's the 100-period moving average. There's the reversal cluster, and off we go. Here, on NVIDIA, we have a similar pattern. That's not a moving average, that's a Bollinger Band, but acts in a similar way. Cluster of candles, and if we get a gap down tonight, well, tomorrow, I have to move this along as well. If we get a gap down, we would then have an island reversal at the top there. And I'm hoping for a dip back down, just down to this candle triangle breakout. That's where we broke out from. That's where we actually got long the last time on NVIDIA, if you remember. So we bought that breakout, and we got out over there, and we've now sold for a move back down to the top of that triangle and the 50-period moving average over here. So those are all of our trades on stocks. We've talked about currencies, we've talked about stocks, we've talked about metals, we talked about crypto, and now onto the big energies, kahunas. Let's talk about natural gas. Before I do that, I'm going back to the chat screen. I haven't covered natural gas yet, Tanil, I'm about to. So you're here just in time. Do I think that the Japanese election is going to make the dollar yen go to 151 or drop? Let's talk about the dollar yen before I get. I'll talk about natural gas first, and then we'll go back to the dollar yen. But I want to talk about NatGas. So for those of you who like trading this very annoying and volatile and dangerous instrument, here's what's going on. Lots of lines, and once again, please don't worry about the mess. I don't like cluttered charts in general, as you probably know. But in this case, because I'm in dark mode, all the lines are showing up more than they should. I'm going to just reset my palette at some point, but not tonight. So here's natural gas, and it's a pretty simple picture. We've got two patterns that dominate this page, and they're both similar patterns. We've got a I've gone blank. We've got a falling wedge here, right? A falling wedge. It looks like a triangle, but it's sort of a wedge shape falling down into the corner. And it's a bullish pattern. We broke out through the falling wedge. Perfect. All right. Then we broke up and we thought we were moving higher. And in this zone, as you can see, this is a day chart. This is a 4-hour chart, sorry. In this zone, ever since kind of like, I don't know, the 14th of July, so about a week, we've been chopping around up and down in a very tight range between about 360 and about 340, 20-cent range. making it pretty difficult to trade because we've seen reversals in both directions on multiple occasions. But the bigger picture of all of this is we've got this rising wedge now. That was a falling wedge, the red wedge. Now we've got this rising white wedge, and we've broken out down through the bottom over there, and we got short. We were short before that. In fact, we got a short position from there at the 200 period moving average, and we have a short position from there at the top of the wedge and that order block. So we're a little bit out of money on one and a little bit in the money on the other one, or at least at break even, maybe slightly in the money, but not much. And we're below the 200 period moving average. We've got all these reversal candles. We're below we were at least, we haven't now, there's the 20 period moving average. We did close beneath it, but we are below the 200. We've broken out of this rising wedge. We've got a double top, perfect double top over here. And I guess maybe we have a tweezer top. We do. Look at that. So on the daily chart, folks, this is absolutely perfect. We have a tweezer top reversal pattern. Absolutely perfect. In fact, it's so perfect that I'm going to have to draw a blob around it because you don't get perfect tweezers like this all that often. So that's a perfect tweezer top. A tweezer top simply means that the candle the day before had a spike high up into that zone, and then Friday, the next day, had a spike high up into precisely the same price level. Absolutely precisely. It doesn't matter what the length of these spikes are, doesn't matter what the length of these bodies are, doesn't matter that that was bullish or bearish, or that was bullish or bearish, doesn't matter what's below the bodies of the candles, none of that makes any difference. It's all about the top. If the top of two adjacent candles is identical, that's a tweezer top, and it's a very powerful reversal pattern, particularly if it takes place on the day chart, and particularly if it takes place under the 200 period moving average on the 4-hour chart, the 100 period moving average here on the day chart, and on a breakdown below the rising wedge pattern. Also, we're still below the 50-day moving average. That's this red line, and that's the medium-term daily sort of line in the sand, if you will. We've closed, I'm going to say on it, but it's probably fractionally above, but let's say on it or below it, just for comfort's sake. So everything's pointing to this moving down, and I estimate, not just because of any news that might come over the weekend regarding weather or politics, which may affect the outcome, but with a neutral canvas this weekend, if there were such a thing, I would estimate that there's a very high probability of this gapping down in a couple of hours' time from now. It's now 8 o'clock my time, and in 4 hours and 15 minutes, the markets will be open. The natural gas market will be open 4 hours and 15 minutes from now. And I think when this candle appears on your chart, we will be lower than the current closing price on Friday. I think we'll gap down. But I could be wrong, and I know there have been some shifts in weather patterns and so on. But if the purely technical traders have been at it, or the algorithms have been at it this weekend, ignoring weather or politics, which you cannot do, obviously, but given a blank canvas, if they had anything to do with it, I think this would gap down in the next 4 hours' time. I think that's highly likely. So given all of that, given the technical pattern and just the general price level, and also given that $3, I think, is a very, very, very key level, and that we have to test $3 at some stage. I think it's too tempting, and I think we'll bounce off $3, and we have a chance of going all the way back up to $4 and more thereafter. So that's my general strategy on natural gas, and we'll find out in 4 hours, let's call it 4 hours and 14 minutes from now, we'll find out whether that's right or not. And then while we're on energy, let's talk about WTI. I'm just short on WTI. I'd encourage you to look at the last live streams and Friday's video. I covered WTI in some detail. And basically we're short, aiming for this double bottom here where we got long and below there eventually. But I think if we get down to about that double bottom and maybe slightly below, down to about 50, slightly below 50, we'll have to bounce all the way back up to Moab. This is the WTI Moab, not Dixie Moab, the mother of all breaks. Very, very similar in concept. Big breakdown, and I think we'll struggle to hold above that level. Overall, long-term target, continued move down into the 50s and 40s maybe even. I think that's a stretch. I think we'll probably struggle to get through 50, probably get back up to 70, but over time, next number of months, and seasonally, when it allows, we should get down into lower levels on WTI. And that's it, folks. Now, for the rest of it, I'll just quickly cover these in 2 minutes. We're still long on the dollar South African rand. Weirdly, that's just moved down a bit on Friday after a nice hopeful start, just ticking down a bit. And we're also long on TLT, ticking up nicely. We added a new long tranche on that on Thursday. I think this is going to squeeze up sharply and shortly, and I think we could get all the way back up to 100 on this. And I'm hoping for a short squeeze. So we're long with an average price of about 86. So if we get up to 100, maybe that'll give us 12, 14% profit on that trade, which would be okay. But I won't be trading that again this year. I don't like it at all, and it's been frustrating and costly because I'm not trading the futures in this event. I'm trading the continuous price, but because it's a continuous price, the rollovers are expensive. So it's been a long and costly trade, nigglingly costly because there's a little bit every day. And eventually you look back and you think, man, that was just such a waste of money. And we're still where we started. We haven't even moved up. So annoying. Nothing on the VIX, folks. I only buy the VIX when we get down into much lower levels. And I normally have a big blob on this chart, a big block. Maybe I got the wrong chart here. TVC. Is that the right one? No. Oh, there we go. Yeah, so the green block at the bottom is roughly where I like to buy the VIX. Might make that slightly bigger, slightly larger, something like this. Into that sort of region, I might consider buying the VIX. And we bought it there last time. There's my last green arrow, actually. So that's where we got long last time. And I normally get out sort of above the top level at about into the mid-20s, something like that, anywhere up into this zone above about 25, into this sort of zone here. And then I get out and wait for the next time. About twice a year, really. Not more than that. Not much more than that. Maybe 3 times a year occasionally I might buy the VIX. It trades a bit like natural gas. It's got a sort of floor, and then it spikes up occasionally. And then on softs and grains, a fantastic day on Friday for everyone, no matter what you're trading here. Long on sugar. We're long on sugar. We're long on wheat. Wheat had a great move, looking fantastic, moving up very, very sharply. Big move up on wheat on Friday. And also across the board, really, on corn, cotton, all looking good. We're long on all of these. Orange juice we got short on, I think it was a Monday. So that one we want to move down. This moved up because of tariffs, and I think we've got to move back down again. Pretty simple, at the top of the range. Tariffs took us there, and supply will take us back down again. And that's it. Coffee, we're short. We added some more on Friday again. We did talk about this in the last live stream, folks, and many of you asked me when I'd be selling coffee. And I did point out that I'll be selling it here at the channel center line and here at the top of the channel. I had this drawn in a few days ago, if you remember, and I said we'd be looking at these levels, and we've got to that one. We may not get to that one, but we sold at the channel center line. So we're now short on coffee again. We'd taken profit on all of our coffee shorts. Short from there, we took profit all the way down here. And then we're still long on cocoa, short on cocoa rather, and nothing has changed. A little bit of a tick up on Friday, but nothing to be concerned about. There's a channel center line, and we're still below there on cocoa. There's our short position at 10.5. We're currently trading at 8, just above 8,000. So pretty good. All right, I'm going to get some questions now, folks, and see what's going on in the chat. And I like the sound. Thank you, Light Chaser. Let me scroll from the top. Give me a little bit of leeway here because I've got to read through a lot of messages. Iron Man. Oh, wow. Hi, TDC. Iron Man. Oh, wow. We have it in our town as well, TDC. We have the South African Iron Man in our city, in Port Elizabeth. And the runners and cyclists and swimmers go right past our house. So it's pretty cool. Hiya, Alicia. Malika. Sergey. What do I think about WTI? So covered that, Sergey. Nice to see you, Jamie. Good day, Sam Stuff. Sound is great. Fantastic. I like the sound. Can you post the Sony model? Keen to have a look. Yeah, so what I'm using here, folks, this is the Sony XM6, I think it is. Let me give you the exact model. I would highly recommend them, but they're very, very expensive, and I think probably overpriced. And I'll give you the model number right now. It's the Sony. In fact, what I'm going to do is copy it and put it in the. So if you like headphones, which I do, hang on. I don't know if I can do this. I'll try. No, I don't think I can. Anyway, the model number, if you're interested in these headphones that are going, I'll tell you about them very, very shortly. It's called Sony WH-1000 XM6. And I can't put that up in the chat on StreamYard because it won't allow me to. Um, Unfortunately, I don't know why. Sony WH-1000 XM6 noise cancelling Bluetooth headphones. And they have 12 microphones built into the bottom of these things, which angle towards where your voice ends up at the best spot, directional angled mics, and they pick up my voice from in front of me here. And I have no need for an external microphone or anything else. I mean, it's just amazing. The sound from these headphones is like nothing you've ever heard before. And I've tested it on these live streams, and it seems to work really well, even better than my desk microphone. So there you go. That's a long answer for Light Chaser. Where do you think euro yen will reverse? Can you draw your blob there? Yeah. So euro yen. Let's have a look at the euro yen. Yeah, there's no doubt the euro yen, the dollar yen, and the pound yen, and all the other yen crosses, Aussie yen, CAD yen, Swissy yen, they've all been incredibly annoying as the yen carry trade has refused to give up its ghost. So this is meant to have come down. I want to switch to the US dollar yen quickly. Let me just show you. So whichever way the dollar yen goes, very often these other ones will follow suit. Now the dollar yen, and we had been short. I don't know if the person who asked the question, I don't know if you remember that we've been selling into these rallies and not very well, I have to admit. And we've been caught short quite often, but eventually we came out profitable on this, eventually having to hold for a long time, and also having to pay the overnights because of the whole reason for this carry trade is because of the interest rate differential and the rollover costs, which are in favor of holding dollars rather than yen. So that's the background to this. And we've started to see this carry trade start to unwind as these treasuries start to get balanced, and we're sort of looking for a situation where some of that money comes flooding back into the yen, basically, and strengthening it against the dollar. What we need is the Bank of Japan to play along. We need the Americans to play along because there's a whole conglomeration of, Japan holds the most US bonds and treasuries, and they're pretty much in bed together. It's a pretty complicated story. I'm not an economist, and I don't know it fully. I've got the gist of it, and it's difficult to explain. I'm not doing a very good job of it. Anyway, what I do think is that, and I'll try and explain it better in maybe tomorrow's video, but what I do think is that the dollar yen is going to come down quite dramatically, down to around about 120. We're at 150 now, but it's going to take time. Now, these yen carry trade unwinds are very dramatic when they occur, and we've had two quite recently. You can see that one there, strengthening of the yen against the dollar, and that one there, and a couple of sort of echoes in between like that. So we're probably not due for another one yet. I mean, I really don't know where this is going to go. People are saying, yeah, we should see a lot more strength in the end. This is going to be rebalanced, and the imbalance of the treasuries and bond situation with the US and the currency is going to be balanced out. But I just looking at this chart, and you have to go with your charts. It looks pretty bullish to me. I think we're in a range, and I think we could go all the way back up to 168, 158, 155, maybe up to the 78.6. We've got a lower high. Maybe we'll have another lower high, and I think maybe 155, that's 78.6% fib. So we could see something more like a crowning pattern than, sort of, and the yen pairs often make these sort of crowns, something like that. So it could take an awfully long time. And until this actually breaks down into the zone here and starts moving much lower, the yen crosses aren't going to do what we want them to do either. And you'll see the same sort of thing on all the yen crosses, I think, this sort of crowning pattern, which is going to take interminably long and eat up all your profits because of the rollover overnight carry costs. So given that, and it's sort of just a thought that I've come across tonight and during this weekend, after watching this dollar yen moving up and holding up over the weekend, despite that big sell-off, it really depends on what happens here, I think. If we can hold this reversal here on the dollar yen, it's quite a stark sell-off, a little sort of triple intraday top there, big bearish sell-off candle, trying to get back up through there. There's the 200 period moving average right there, straight above us. and it's also this 50% retracement level. If we don't hold here, I fear that the dollar yen will move all the way up to 155, 154.80. We're currently trading at 148.80, and so that is 600 pips. And I don't think that the euro and the pound are going to drop 600 pips against the dollar immediately, not at this rate. So, which means that we could see that the euro yen and the pound yen push up a little bit further until this turns around. However, this might turn around tomorrow. This might be the top. 200 period moving average, 50% retracement, perfect place to turn around, even though we've just made a slightly higher high compared to that previous high there. This is the place. You can see we tried on initial rejection. Maybe we'll try again. And maybe this time we'll hold and we'll start heading down towards that 120 level. Right. Having said all that, until that happens, we're not going to see much joy on the euro yen and the pound yen. And these will keep on moving up to sideways. And this is the euro yen. The question was about the euro yen. I had to fill you on the dollar yen, and someone else asked about the dollar yen as well. So euro yen will move up to sideways until that occurs on the dollar yen. And when that does occur on the dollar yen, I think we'll see something very dramatic. And I think it won't just be, a quick sort of a short sell-off. I think we'll see something like that. All right. And when that'll occur, could be tomorrow, could be next week, could be next month. But you'll see that this often happens, and the last time it happened, we moved from 175 down the top Bollinger Band, straight down to the lower Bollinger Band at 155. 2,000 pips in under a month. Could we do the same? Quite easily. We're pretty much up there again. Could we do this? 2,000 pips from where we are now, 175 down to 155, right back down there. Is that out of the bounds of possibility? Not at all. When you look at that, now that we've drawn that on our charts, that looks pretty reasonable and actually pretty probable, really. And I think that's most likely thing to happen. When that's going to happen, I think it could be today, tomorrow, or tonight, starting tonight. If not, this might have to go all the way up to the previous high, maybe slightly higher, 176, maybe 178, maybe only 175.3, or maybe just where we are now at 172.9 and a turnaround here and a dramatic collapse. Maybe next week sees the beginning of that. I don't know. And if that does occur on the euro yen, of course, we'll see the same on the pound yen, the pound looking slightly weaker than the euro, and that's why it hasn't moved up nearly as fast. And you can see it's traveling more across the page than the euro yen, which is going up. We sold there on the pound yen on the 8th of July. It's now the 20th. And so we've been holding that trade with its carry costs for 2 and a bit weeks. And it gets annoying. So I want these to start moving just as much as anyone else does, not because I'm worried about these positions, but because I don't want to pay these exorbitant rollover costs every night. And that's why these markets are moving up, because everyone else is actually gaining from those rollover costs or the carry trade. All right. MD, we talked about NVIDIA, so that's done. Boyd Bailey, thanks for being here, mate. 2 positions going into Monday, long the Qs and long Boyle. So short natural gas. Short? Oh, short the Qs and long natty. Confidence? Well, I'm pretty much opposite Boyd, so not a great deal of confidence, no. Joshua, you asked about the Japanese election. Is the yen going to 151 or is it going to drop? Okay, we talked about that. Tanil, good evening to you. Tanil, we caught up with natural gas. I hope you got that. WTI we've covered. Sir Jill, nice to see you, mate. Piero, any chance for some TA on palladium? Sure, let's have a look at palladium quickly. Let's go to a metals chart. Let's steal the silver chart. Shall we do that? And let's go to XPD. And which one shall we use? Okay, let's use the Oanda chart. And there we go. So if you remember on palladium, so we've been long on palladium and we basically abandoned this long trade about halfway up this move. So we got long at the bottom, we got out sort of up here somewhere, probably at 1,150. And I think we got in at about 980. So we're not in this trade. We've missed out on this last little bit here. We won't get that profit. It's gone forever. We won't get it. But we have broken up above that recent swing high. I really don't like trading these instruments much, guys. And they just, it's not a great, unless you're an investor or a long-term trader. It's not my favorite. Yeah, so we've moved up dramatically. Where have we got up to? Let's draw a line across there, just up into that resistance level, really, over there. It's very, very low. The price is pretty low, and but it's not the lowest it could go. It's not sort of super cheap. Um, for many years we traded in the sort of 5 to 1,000 range, up to about 900. Big move up in the 2000s, and 2020 and so on, it dropped back down, back to where we are. It's probably due for a sustained rally. It's difficult if you're a day trader or a swing trader, if you're not sort of taking a longer term position on this, and it gets very spiky and messy. It's not, there are much better instruments to trade, I think is what I'm saying. I prefer to trade, if you're trading metals, I'd rather trade gold, silver, platinum, uranium, and even platinum, really. Uh, will palladium make a long-term comeback? Are we going to see a lot more demand for internal combustion engines going into the future? Possibly. I don't know. It's used in batteries as well to an extent, so it's not only in ICE engines, but I don't know. It's just really not my favorite. So yeah, you want some TA on this. If you want to buy palladium, if you really must, I'd actually be probably looking to sell it right now. This is a very clear dark cloud cover reversal candle, and I would probably be looking to sell palladium at 13.15 if I was going to if I was going to be trading this myself personally now. Maybe 13.10, 13.12. I'll be looking to sell palladium on Monday at 13.12 for a move back down to the moving averages, at least the 20, and probably the swing high at about 11.50, 11.60, 11.80, 11.50. Yeah. So I'd be looking to sell over there. I'll draw that in for you very quickly. And then we must finish the stream, folks. So it'll open up here, open up there. On Monday, I'd be looking for maybe something like that. I have to draw this down, and then a return back to there, and then a bounce off there, something like that. And then possibly quite messy for a long period of time, really, because, it's quite a big move up. So, and a lot of this will be pretty random. It could be, okay, I'm just making this up now. And then either we'll carry on moving up if there's more demand for it, or whatever, or we'll just fall back into the range. I don't really know. It's not something I like to trade much. We took the trade right at the bottom down here because it was cheap, but now it's not. So I'd be selling, but probably not buying. Right, now then, let's go back to the silver chart. All right, so that's yeah, so that's palladium. Platinum. Okay, my son wants platinum. Or was that palladium? Oh no, PLN. Okay, let's have a look at that one. Which one should we choose? Let's use Oanda. Just give me a second. Okay, I'm just looking. Sorry, I'm just looking to see if there's any news. So, all right. So this is US dollar against the PLN. That's the Polish zloty, and well, it's moving down. I don't know what your question is. Are you thinking of buying this or selling it? Um, it's obviously in a downtrend, so we probably be looking to sell. What's to the left here? We've broken that support too, so that's not good. The next support level doesn't look great. And it's really interesting, actually. It's very strong. horizontal line. Let's pull one where we are now. So we're in that congestion zone to the left-hand side of your chart here. We're below these support levels going back to 2021. This is the dollar against the zloty. And the zloty is doing a good job here. It's gaining against the dollar quite dramatically. We moved from 510 down to 360 right now. Well, yeah, 365. So it's been really strong. US dollar's weakened against the Polish zloty. So yeah, it's pretty low. Would you be selling here? No, probably not, because it's like, right at the bottom of the range. Would you be buying? Probably not either, because we've broken down through these supports. And I would suggest that now that we've broken that support, we'll probably range for a bit. We bounced back up again, though, have we? Back up above that support, maybe. I don't know, are we? We're back above that support. You know what? Actually, I don't trade this. I have no idea about the nature of this currency against the dollar and how it might react and behave. But just looking at this a little bit more closely, we are very, very oversold and right at the bottom of a range. Dollar's very weak against this currency. We've broken back above the 20-period moving average, and also we are now back above this last sort of range here. We're back inside. We had broken down below those lows, and we're back up above them now, as you can see. And we're holding above the 20, and we've got a nice consolidation flag here. So it might be worth having a go at the long side, actually. And if you're looking to buy the dollar against the Polish zloty, this might be a perfect spot. So we're currently trading at 365, and I'll just simply put my stop loss or hedge below 363. I'd probably just put it below this recent swing low to be much safer at 358. So you could get long here at 365. I'd consider adding some more. I wouldn't put it all on here. I'd put like half, whatever you're planning. I'd add some more on at 363, just a couple of cents down below there, and I'd put my stop loss or hedge. I would hedge, not use a stop loss, at about 357. Yeah, I think that would be a good play. I hope that was helpful to you. Maybe a really good play. I quite kind of like that. Pretty good. Right. I keep on stealing my silver chart. I want it back. Right, so whilst we're on this chart, looking at up above us, you can see Ethereum is pulling back in a wee bit. So is Bitcoin, and so is XRP. I have no positions on XRP now, and no positions on Ethereum, but I've got orders stacked up down to the gradient line to add those positions back on that I took off at the top here. Same on XRP. I've got orders to take to add those positions back on that I took off at the top here. We took them off right at the top actually 3 days ago on that spike. And so I've got orders to add those back on above and below this gradient line. So those are looking like they may just give us that chance to rebuy some of those dips. I'm hoping that XRP and Ethereum don't take off forever without us, because I now have no positions, although I've got 70% of my Bitcoin position longs still in place. All right. Mr. Tabagi, I don't want to miss anyone out here. Marcin, nice to see you. Piero, nice to see you. And Punk Piggy, nice to see you. Looking young and dashing as always. Thank you, Punk Piggy. Appreciate that. And Manatee, Orange. I'm wearing those exact headphones. Perfect. They're brilliant, aren't they? They're really, really good. Unbelievable. Very expensive, though. I think unfairly expensive. $450 for a pair of headphones. Not good. But I'm going to be using these every single day from now on. I absolutely love them. So I'm pleased. And Manatee Orange likes them too. So are yours also the sort of bluish black color? Mr. Tabaji, hi James, thanks for your amazingly informative market and TA. I've learned loads. I've started to become a much more confident trader. Well, that's excellent news. Keep up the fantastic work. I sincerely appreciate you your market hypotheses. Very good English as well. Thank you, Mr. Tabaji. Appreciate that. TC. TC says, Tanil, he's talking to you. TC is talking to you. Yes, he did. He also got some super snazzy headphones. Sound quality is amazing. Sony WH-X1000XM6 wireless noise cancelling headphones. German 30, please. All right, Daniel, good point. Let's have a look at the German 30, and then we'll finish off. Last look. So German 30, I don't have any trades on, but I wish I did, and I would be short. But we've taken plenty of profit from this market already, and maybe it's saying to us, okay, that's enough now. Go and do something else for a bit, and you can come back here later. So we got short on the liberation. This was just luck, so I'm not claiming it, but we just happened to be short at this double top here, at the top of the channel, where we've been short on this most recent occasion too. We happened to be short there per chance. Not really per chance, because you can see why we sold there at the top of the channel. Pretty obvious. And the top Bollinger Band and the center line of the longest channel. But it was just luck that it actually sold off by, like, I don't know, 23,400 down to 18,800. It just happened to be the biggest move, like, in history that happened whilst we were already short right at the top of the trend line. So I'm not claiming that one, but I'm claiming this one. We got short again when we got back to the trend line, and we got out at the 50p moving average. We reversed, stopped that trade for profit, took profit, and reversed and got long, and got out of the 20p moving average. So we got all of that move down, all of that move down, and all of that move up. And that was that. And then we did get short there, and we got out. So we basically don't have position. Oh, we got long again, then we got out. So that's actually what happened. I'm just recapping. So we got long again after getting out there, and we got out there. So, or hedged, depending on your approach. When I say out, I either mean a stop loss or a hedge or a take profit. In many cases, instead of a stop loss or a take profit, I'll hedge instead. And often I'll hedge my winning trades as well, not just losing trades. It's not a losing trade technique. Hedging is there to lock in profits on a winning trade as well. So that's what we did, and we got out. Anyway, point is we have no positions on here, and my overall idea is these two arrows, and I wanted to get short. We didn't quite get to the trend line. We got almost there, and I didn't take the short. I should have, but I didn't. And we basically going to wait for the trend line again, or back up to this higher level through the trend line and the 786 Fibonacci extension and the top Bollinger Band. I think these two paths are equally likely. And if we don't get either of those paths, then I suppose we're just going to be left behind, and we'll have to get into the trade later on. We may get in on a breakout. Let's zoom in. Notice that we're resting on top of the 20 and the 200 period moving averages here, and that little swing low just at that level. So if we do move down and get a break below that level, then there might be an opportunity for us to, so let me try and draw it out for you, move down through those moving averages, perhaps down to there, a bounce back up to the underside of those moving averages and that swing low, so up to there, maybe that trend line, and then down again, like that. So those are three paths that we could follow, and at the moment I'm hoping for the green path, but I'll accept the orange one, and if we have to, we'll have to buy on the retracement on the breakout down through those moving averages back to the newly formed trend line, and then a rejection from there for a continuation of the move down. Alternatively, if all of these markets are going to move higher for the next week, month, 2 months, and into the rest of this year, then all of this is just nonsense, and the German 30 will carry on moving up as well. Right now, I don't know, and it doesn't really matter because I don't have a position on it. But those are the sorts of paths that I'm considering on the German 30. If we don't get any of those paths, then that means we just gone sideways and done nothing, and there won't have been opportunity to trade anyway. No one makes money in sideways markets, folks. So when we see these big Bollinger Band squeezes occurring on the NASDAQ, on the S&P, on the dollar index, all over the show, I'll show you the Bollinger Band squeeze. This has actually moved out a wee bit now, but I can show it to you on the S&P. That's also moved out. Where did I see that Bollinger Band squeeze? Was it on Bitcoin? I think it was on Bitcoin. I didn't have the Bollinger Bands on there. All right, doesn't matter. But in any case, we've got all this going on, and I think that just going back to the stocks, um, I don't know. I don't know where we're going next. I have a feeling that although it looks like everything should pull back and that we're overextended, uh, valuations are way too, everything's just overcooked. Despite all of that, I continue to have the feeling that this market could keep on grinding higher like it did last year and locked everyone up. Now, remember, this rally, what we're seeing now in the markets, is being fueled by retail traders and not by the, the, the whales, the big funds, the banks, and so on. And they are the ones that have to decide what to do next. Are they going to try and catch up and start buying furiously into this coming week? Or are they going to double down and start selling more furiously and to try and take out the retail traders and get that liquidity on their side? I don't know. It might not be this coming week. It might be the next week or the next week or the next week. I don't know. Either they're going to switch long or they're going to double down on the shorts or they're going to do nothing and remain in cash, those that are in cash currently. I really don't know. We'll find out soon enough. And whatever these markets in general all do, I guess the German 30, although it doesn't trade quite the same as the NASDAQ and the S&P and the Dow and so on, if the markets all sell off, the S&P, German 30, the NASDAQ, and the Dow will all sell off together. Okay. Manatee says he's wearing the WH1000 XM4. Manatee, those ones are the XM4s are actually the next best ones, apparently. The XM5s, the next model, these are sixes, but the XM4s are almost as good as this newer model that I've got, and they fold. Yours fold. The XM5s didn't. And apparently I haven't heard the sound on the XM4s, but apparently it's pretty much the same. And and the XM4s, because they're a slightly older model, are half the price. So that's probably the model to buy. I didn't know that at the time. Otherwise, I would have bought the XM4s because these are just too expensive. I think unjustly overpriced. Has a good dividend also. Mark my last name. I don't know what you're talking about. The head on which those microphones is resting is actually more expensive, and that's you. Yeah, you're right. Yeah, a little bit more expensive. And Harsh Candy, any updates on wheat, or is it the same old? Yeah, so we looked at wheat, Harsh. No change really, except for a really good rally on Friday. And let's have a quick look at it. We've been talking about wheat for a number of weeks now, and we continue to hold these support levels within this falling wedge pattern or descending triangle. Depends on how you look at it. I'm calling it a falling wedge and not a descending triangle. If it was a descending triangle, I'd expect to break out through the bottom, but it is actually fractionally a falling wedge. Even if it isn't, I'm going to make it look like that, no matter what. So I can draw that line along the bottom there. And I think you'll agree with me, actually, that it really is the sort of thing that I'm talking about. In other words, a falling wedge. So yeah, we've got a bit of a flat bottom here at the green line, but it's a falling wedge. And the reaction off the bottom here so far has been a bit insipid. It's taken a very long time. And in fact, we've been stuck at the bottom ever since the war in the Ukraine. The war in the Ukraine began. And we've been trying to buy wheat ever since then, and that was in about 2022, beginning of was it mid-2022, somewhere around here. We got a big rally up the beginning part of the war. Not to say that we should be celebrating that at all, but we did get a bit of a bump up, and then it's just dribbled down since then. And despite all the fighting going on in, Odessa and that region and the hinterland and where all the wheat is transported, it doesn't seem to be a problem. So I don't understand the logistics of what goes on in those war zones. So, but a big wheat producer should have put pressure on the price, but there were environmental and supply issues that counteracted that. Weather, bounteous weather. So, but I do like the price movement on Friday. There's our last entry position. That was on Tuesday, the 15th, and we got in at 532. We're currently trading at 545. I expect we'll break up through the top of this level and eventually get up into some of these zones. And the green and the brown blocks are my targets in general, roughly. And if and when we get there, I'll take profit or hedge, probably take profit. Once again, there are calls for this commodity super cycle to begin, as I have made these calls every year for the last probably 5 years. But those calls are resounding again, and they always seem to occur when there's a little bit of a bump up in commodity prices, and then the commodity bulls all come out and call for the super cycle and El Nino and so on. I won't deal with Solana today, MD, but we can talk about it in the next live stream. I think I've had enough now. I'm tired. We've been here for an hour and a half, and my other camera has fallen apart, so it's annoying. I'm on the camera on the computer now. I'm not even sure how it looks. I can't even see. Maybe half my head's cut off or something like that. I don't know. But I hope you can see me and hear me. And until next time, thanks for attending. Folks, a couple of things before I go. Below this video, there's a link that says subscribe. Please press that right now while I'm talking. I'll give you a second or two to do that before I carry on. Have you pressed it? Okay, thank you very much. And then further below this video, there's another link where I'm giving away a whole bunch of free stuff, and it's called the Trader's Survival Kit. And if you click on that link, I'll send you a whole bunch of stuff, including my AI song list, my G7 trading system ebook, and a couple of videos, which I think you'll find useful. And in those videos, I address my G7 trading system and risk management. So I think you'll find that useful. All you've got to do is click on the link that says Trader Survival Kit below this video. But most importantly, make sure you subscribed and give us a thumbs up. And hope you enjoyed it. Folks, I'll see you in the next live stream, probably tomorrow. Keep an eye on your inbox. Make sure you press the notification bell. And if you do that, you'll get a notification when the live stream videos are scheduled. That'll come to your email inbox and you'll be able to get an alert for that. Take care, everyone. Have a great day. Enjoy the rest of your Sunday evening, and I'll see you soon.